Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Thursday, the Australian dollar posted a bearish outside range day after rejecting the 80-cent level, and since then has followed through further and reaches its target of 77 cents. And now with a modest rebound in place, as the market has also established the 60-day moving average at 76.78. It is assessed that this retracement can get up to around 78.35.45, and from there may actually reverse and then see a re-challenge of the 70-cent level. If we close beneath there, then that would expose the region of around 75.80. Now, the US dollar, which measures the greenback strength against a basket of 6 major currencies, staged a further rally on Friday to a high now around 90.80. This has put a bit of somewhat of a negative sentiment for the euro after it took another challenge at that 128 level and failed and rejected for the second time. Looking for the downside, I believe the market will continue to press on and look towards this region around 119 figure 60 area, with the technicals also in place to support this view for this week. We do have the non-farm payrolls this week, and tomorrow we do have the RBA rate decision, which is widely expected to keep rates on hold. The dollar yen clearly showing bearish divergence from the RSI and does support a sharp rejection from the top side. A little bit difficult though to try and pinpoint the actual rejection, somewhere around 106.55 to about 107. Nevertheless, while this continues, the bearish divergence should send the market back towards 106 or lower towards the bottom side of the range around 105 figure 20. Looking at sterling, well, since the rejection of 142 figure 45, the bears have been around for 2 days. Into the start of Monday though, we are seeing a small retracement. Nevertheless, the technicals are still somewhat dented from the fall, and I do feel we are looking down towards 138.30. Now a break beneath there exposes 135 region. This would incorporate with the sterling yen heavy leg, that is the sterling. And I do anticipate we are falling towards this trend line, which is somewhere around, if I highlight it, 146. So any advances should still be contained by that 150 level. Gold plummeted on Friday and nearly reaching its target of 1,680 to 1,695 after inking in an intraday low of 1,717. Still, from a technical point, the market is still poised for a down test. Clearly, from the fact is that the bears are still lingering and therefore could see a rejection if a challenge of 1,765 and see that down test. Wrapping up with oil, the market is idling at the moment and somewhat holding to a negative stance, and I still feel there is divergence there, and I am looking down towards somewhere around for this week of about $58, but there is levels all the way down, so do check the report and get a little bit more of an idea on the downside risk. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the interest report. I hope you enjoy the great start to the day and to the new week.